The Compartamos strategy on savings is one in which, we've tested, like I've mentioned, backstage, we've done a ton of things. One of the things we did was we actually went and built a bricks and mortar traditional kind of savings operation in rural Mexico. And what we found out was that it was very inconvenient for the client, for most of them, because of the population densities and kind of the traveling times and transaction costs involved with that, but also kind of economically illogical in the sense that the amounts that our clients need to save with us are so small that the transaction cost of having a brick and mortar full banking branch in rural Mexico just didn't make any sense. So that reinforced our idea that we needed to use two things. One is technology, and the other one is this existing infrastructure of, yes, other banks and postal offices, but mostly of retail space throughout the country to be able to provide these kinds of services. Now, in terms of technology, we've tested things either within mobile banking and things as basic as cards. And I think that very rapidly we found that technology was soon becoming a commodity. Tons of choices and very competitive and very good people to work with. The thing that kind of fell behind was the ability to work through retail space, and specifically to do so in the context of mobilizing savings. We were already working with retail with our loans. So the way that Compartamos has worked throughout 20 years is actually as a cashless bank, because we've never actually handled the cash. We've outsourced that to other traditional banks and to retail space. We have 320 branches in the country, but our clients, or 1.5 million clients, actually transact at more than 8,000 different points of banks and retail. So to have that footprint, to ourselves build that footprint, would require, not only a very big capital expenditure, but would raise transaction costs significantly. And that's only for the lending. When we think about the savings, we believe that we need an even bigger network to reach our clients and for it to be very, very convenient. You can't really ask a client that wants to save 50 pesos to actually take a bus and travel 1.5 hours to do that transaction. So it needs to be close to the client and very convenient. And to us, that's small retail locally within this suburban, urban, and mostly rural Mexico. But the issue about banking correspondent law was debated for many, many years in Mexico, and it basically had to do with the requirements of what does it take for a small retail to be able to mobilize deposits for a bank. We've got a functional law approved a few months ago. It's not the law that, honestly, we would have liked to see, because we still see that technological barriers and sometimes the security barriers for entry for a small retailer are quite significant. They're still required an internet connection where, landline, where in many places it's not available, or they require the kind of processes that for some of these retailers is very, very high end. So we're working with that. And I think that in a country like Mexico, where you do have this huge infrastructure of payment services, to be able to reach to the tens of millions of clients that are still not served with a savings product, you need that kind of branchless banking to happen. And again, it's about different things happening at different times. And not only the technology, it's also the regulation. And for many years, the problem with regulation was really more political will than anything else. So we've gotten over that hurdle. Now we need to create these banking correspondents, make them functional, and try to develop these services through them. I think the lessons that we get from kind of the whole IPO story are many. There are many and varied, but I would say that one lesson that I think that stands out in our minds is that one of the models that I think has a great possibility is the model of using commercial principles to solve social problems, and to do so in a way that you can tap the capital markets, to tap investors that can't or are not willing to sacrifice a return on their investment. Now, clearly, the use and the whole concept of social investors, I think, is not something that opposes to that. I think they're both complementary. I think the fact that there are investors that label themselves as social, that are willing to sacrifice their returns, is something that needs to be worked and needs to be, increased and used to create all these social ventures significantly. But I think a complement to that is for all those investors that are not willing or even they can't sacrifice those returns, how to bring them into trying to solve social problems with commercial principles. I think, again, this is not a black and white story. I don't think it's either this model or that model. I think we still need to be a lot more creative than that and try to figure out different ways to approach the same end, which is trying to service clients with good quality financial products. Those may come from for-profit institutions, or they may come from nonprofit institutions, or for a mix of that. I think in the end, what the client wants is easy access, good quality products, and that's what we should strive for. And it's not going to be black and white. I think it's going to be all shades of gray.